China's dominance over agriculture, banking, and energy in Central Asia. An excerpt from Mehmet Emin Hazret's book, Central Asia, the Heart of the Turkic World and the Stage of Geopolitical Competition, Power, Identity, and the Future in the Turkic Republics. China's struggle for control over agriculture and water resources in Central Asia. China is expanding its influence in Central Asia not only through energy and infrastructure investments, but also through strategic control over agriculture and water resources. This approach has the potential to make the region dependent on China not just economically, but also ecologically and in terms of food security. 1. Long-term agricultural control, the lease, direct, bind, strategy. China acquires large-scale agricultural land in Central Asia through long-term leases, organizes production according to its own needs, and settles Chinese laborers in the region, implementing a model of permanent economic colonization. Leased farmlands by China, 2024 data. Country, leased area, hectares, lease duration, purpose. Kazakhstan, 1,000,000 hectares, 99 years, grain and soy. Tajikistan, 150,000 hectares, 49 years, vegetables and cotton. Kyrgyzstan, 300,000 hectares, 50 years, rice and corn. Most agreements limit local employment, and the majority of production is exported to China, creating long-term sovereignty risks. Notable cases. Kazakhstan, 2016 mass protests erupted in over 20 cities against China's plan to lease 1 million hectares. The government froze the deal under public pressure. Tajikistan, cotton fields operated by Chinese companies contribute minimally to the local economy. Most of the output is exported to China. 2. Geopolitical pressure on water resources. Sovereignty erosion through river control. Rivers critical for agriculture and energy in Central Asia are being used by China as political leverage through dam projects and water consumption policies. Major rivers affected by China. River. Source: Chinese region. Affected countries. Chinese policy. Ili River. East Turkestan. Kazakhstan. Dams reducing water flow. Irtish River. East Turkestan. Kazakhstan. Russia. Projects limiting flow. Darim River. East Turkestan. Internal. China. Redirected for industry and irrigation. Key impacts. Water shortages. Dams on the Ili River threaten Kazakhstan's Lake Balkhash. Diplomatic pressure. China uses water-sharing talks to extract political concessions. Ecological damage. Reduced flow may trigger disasters akin to the Aral Sea crisis. 3. Regional implications of China's agricultural and water control. A. Deepening economic dependency. Food production prioritizes exports to China, undermining local food security. Investments benefit Chinese producers over local farmers. B. Approaching environmental crisis. River and lake depletion leads to climate migration, drought, and reduced yields. C. Social and political tensions. Kazakhstan. Protests against Chinese farming policies intensified in 2023. Kyrgyzstan. Civil society and farmers voiced strong opposition to Chinese firms. Tajikistan. Discontent over China's water policies is growing. Silent sovereignty through resources. Through control of agriculture and water, China builds a geo-economic and geopolitical sphere of dominance in Central Asia. Long-term leases, water redirection, and the influx of Chinese labor. Suppress local production. Threaten food and water security. Undermine national sovereignty. Despite growing local opposition, government's room to act is limited by economic pressure from China. China's mechanisms of control over the banking and finance sector in Central Asia. China consolidates its economic power in Central Asia not just through trade and agriculture, but also through banking and finance. This strategy deeply influences local decision-making and institutionalizes financial dependency. 1. State-backed banks and credit strategy. China actively uses state-owned banks to finance strategic projects, particularly in infrastructure and energy. Chinese loans to Central Asian countries. 2024 data. Country, loan amount, $1 billion. Key sectors. Kazakhstan, $20 billion. Energy, transport, mining. Kyrgyzstan, $6 billion. Energy, roads, telecom. Tajikistan, $5 billion. Mining, dams. Uzbekistan, $8 billion. Agriculture, industry. Turkmenistan, $9 billion. Natural gas, ports. Key lenders. China Development Bank, CDB. China Exim Bank. Asian Infrastructure Investment Bank, AIIB. Loans are often repaid through concessions in natural resources, land, or key assets. Examples. Tajikistan, 2011 1,000 square kilometers of Pamir land transferred to China in debt settlement. Kyrgyzstan, 2017 an electricity plant handed over due to payment failure. 2. Digital financial influence. Yuan and payment system integration. China expands its influence via digital currency and mobile payment systems. Strategic moves. Trade in yuan. Promoting yuan over USD. Digital payments. Widespread use of WeChat Pay, Alipay. Yuan internationalization. Aiming for regional currency dominance. 30% of China-Kazakhstan trade, 2023, was in yuan. WeChat Pay/Alipay usage is increasing in Kyrgyzstan and Tajikistan. 3. Penetration of local banking and transparency issues. China is not just a lender, but also an investor in regional banks. Influence strategies. Capital entry. Chinese banks acquire stakes in private banks. Loan conditions. Loans tied to Chinese company involvement. Transparency deficit. Most agreements are not public. Examples. Kazakhstan National Bank, 2022 details of Chinese loans undisclosed. Kyrgyzstan, some deals bypassed parliamentary approval. Risks of financial dependency. A. Debt spiral. Inability to repay leads to asset concessions. B. Eroding banking sovereignty. Chinese actors gain disproportionate influence. C. Yuan dominance. Weakening USD, aligning monetary policy with Beijing. The architecture of financial dependency. China's financial strategy builds a multi-layered dependency via loans, digital payments, and capital entry. It limits policy flexibility, pulls local economies into China's sphere, weakens financial sovereignty. Unless broken, this cycle will make China not just an investor, but the region's financial decision-maker. China's influence over the energy sector in Central Asia, controlling oil, gas, and strategic resources. To secure energy supplies and reduce foreign dependence, China has made the Central Asian energy sector a strategic priority. It seeks direct access to vital resources, oil, gas, uranium, rare earths, and uses infrastructure control to solidify its influence. 1. China's core energy strategies. China's energy policy in Central Asia focuses on resource assurance, imports from Kazakhstan, Turkmenistan, Uzbekistan, infrastructure control, direct operation of pipelines, power plants. Long-term contracts, decades-long deals to establish permanence. China's energy imports and key projects, 2024 data. Country, annual import, $B, main resources, major projects. Kazakhstan, $10 oil, gas. China, Kazakhstan oil pipeline. Turkmenistan, $8 natural gas, Central Asia. China gas pipeline. Uzbekistan, $5 gas, uranium, power plants, gas fields. Kyrgyzstan, $1.5 hydropower, dam projects. Tajikistan, $1.2 hydropower, Pamir dams, Rogan funding. 2. Strategic energy flow via pipelines. China manages energy flow through critical pipelines. Central Asia, China gas pipeline, 7,000 kilometers, from Turkmenistan to China via Kazakhstan. China, Kazakhstan oil pipeline, 1,200 kilometers, major crude supplier. Gorkynish gas field, Turkmenistan deep Chinese investment ensures control. In 2023, China imported 16 million tons of oil from Kazakhstan. 80% of Turkmenistan's gas exports go to China. 3. Investment-driven control. Chinese energy firms dominate. China leverages investment to gain geopolitical advantage. Project financing. China funds infrastructure, assigns management to its companies. Local firm exclusion. Priority to Chinese firms sidelines local industries. Direct ownership. Debt repayment leads to asset transfers. In 2022, China invested $5 billion in Kazakhstan's oil infrastructure. Turkmenistan handed gas fields to Chinese firms due to debt. 4. Uranium and rare earth elements, capturing strategic minerals. Central Asia, especially Kazakhstan and Uzbekistan, is rich in uranium and rare earths. China secures long-term access. Kazakhstan, China holds a large share in the world's top uranium producer. Uzbekistan, a 30-year uranium mining deal institutionalizes China's role. Mining stakes. Chinese firms gain direct ownership in major mining operations. In 2021, China bought 49% of a leading Kazakh uranium firm. China secured 30-year rights to Uzbek mines. 5. Energy dominance risks. Threat to regional sovereignty. China's control over energy entails political, economic, and ecological threats. Political pressure. Indebted countries concede land or influence. Industrial pressure. Chinese monopolies stifle local development. Water resource control. Hydropower projects impact regional water security. Tajikistan. Rogan Dam finances deepen China's grip. Kyrgyzstan/Uzbekistan. Water agreements create dependence. Energy security or energy dependency. Though seen as a development opportunity, China's energy strategy narrows sovereignty, deepens dependency, tilts geopolitics in Beijing's favor. Strategic sector capture and demographic intrusion. Through control of strategic sectors, China places engineers, workers, and their families in the region. Far from liberating the region from raw material dependency, this invisible and silent occupation embeds long-term dominance. Most dangerously, local populations remain unaware of the risks ahead.